how does the money move, and how does that entire thing work? Is that true, or are there other revenue lines for the lenders even when the late fee is not involved?
And if you're trying to make a decision in the rational domain or rational universe, don't be an entrepreneur.
Hello and welcome to a brand new segment of FinTech Ki Baat, Dhande Ki Baat with Mr. Rajat Deshpande. Sometime back, we had a really interesting conversation about the journey of building FinBox, what essentially were the challenges, how Mr. Rajat and team kind of overcame that and reached where they are today. Now let's deep dive into what FinBox does, what kind of solutions have they built, and essentially how it is impacting the common man and the industry. Having said that, right, let's take a step back and understand the origin story of the name FinBox.
Origin story of the name FinBox, I feel there are multiple versions of the origin story, and nobody really remembers what it is. But the ethos was that this was something which is a collection of financial tools in a way, right? In the early days when this was a personal finance management thing, right? So financial toolbox कई लोग बोलते हैं, कई लोग fintech toolbox बोलते हैं अब, etc. But the idea was कि we will build a bunch of things, मतलब for people to sort of use. And इससे पहले the name was My Center, ऐसा करके we had thought, and I had registered that website, but it really didn't ring a bell. It was like My Financial Center type of stuff. And one day I was just, I think, jogging or something, and I realized कि इससे अच्छा हो सकता है, and I went and I searched for this domain name and I got it. I'm like कि अब तो यही है. And a cooler, interesting story is about our logo. So we were trying to find कोई design कर दे, and we found this guy who was in class 11th in school, and somehow through contacts and connects, and then he came and he made our logo, and I think he was like entrepreneurial tab, so he charged like reasonably कम पैसे नहीं charge किया, I feel, at that time. He's class 11 guy, and he just was an entrepreneur, and he did it, and that logo stuck. Everybody just loves that logo. उसको कुछ भी touch up कर दो तो there is a mutiny in the company, and it has just been there for quite a long
वही लोगो है.
वही है, बस कलर थोड़ा चेंज कर दिया है, बाकी it's exactly the same.
Oh, nice.
Yeah. So we tried to change the
logo somewhere here to show it to the audience as well.
Yeah.
Sorry, you were saying.
No, yeah, absolutely. So the deal here is that so that's how it came about. But you can imagine, we built so many products now, and I think the ethos that we've sort of built is this ethos of building. I don't know if it's so. There are like these two things, right? Two ways of building companies now. One is the usual Silicon Valley gyan from Y Combinator is do one thing, do it well, right? Very
Right.
It's one piece that I feel works really well, but if you get to that one thing, right? And then there is this theory of compound startups, which I wouldn't say is very, very famous now, but this I read this from Rippling's founder, right? So he put out he talks about it in a podcast. He's put it out on their website and all that. Compound startup means ki you pick a segment and you build everything that they need, right? And you make it work well together, right? So that I think has stuck with us. So you build a lot of stuff that really solves problems for the domain that you are sort of aiming for. And I think this word compound startup I discovered just recently, but I realized this is our ethos ki chalo we want to like solve a
Understood.
bunch of stuff and not only try to find that one thing that will just scale rapidly and shut off everything else. Which is more, I will say, Silicon Valley kind of worldview. Why I say this Silicon Valley piece is because the depth of the market in the US means that you can build $1 billion company on a very small use case, right? Typically, India is
Right.
doesn't have that depth yet, right? Which means that typically people are gravitating towards solutions, and you will see all large fintechs at least are multi-product companies now, or medium-sized
Of
fintechs are
course.
also multi-product. And I will say the reason here is because
Bilkul.
of the gravity that is acting on the companies from an economic standpoint, which is essentially the ratio of customer acquisition cost to the value that we realize, right? So you have to build all of
Right.
this to sustain. If you don't do that, typically it doesn't work. So you sort of
Right.
internalize that in a way.
No, definitely, I think multiple revenue streams needs to be created if you were to justify the current customer acquisition cost that you would. And I think this also, this also makes sense for a lot of B2C companies nowadays, right?
Yeah.
Sorry. So we have seen a lot of B2C fintechs that were earlier trying to use one product as a hook and now doing 10 different things. Up insurance bhi le lo,
Yeah.
loan bhi le lo, credit card bhi le
Yeah.
lo, wallet bhi bana lo.
Absolutely.
Because
I think
कहीं ना कहीं से तो पैसा आ ही जाएगा.
this is the segue into a perfect segue into embedded finance, I feel, no?
बिल्कुल.
So, I don't know. So, given we are talking about that, the
Right.
we should maybe define embedded finance, and I wouldn't say there is one definition. And
Yes.
I'll quickly give you a history of how we stumbled into it. Okay, so
Please.
there's a story here. We were sitting in COVID, no originations happening, and our product was origination API underwriting APIs, which was dependent on originations. So we were like, okay,
Right.
what do we do? And in between, some of these non-fintechs reached out, we want your underwriting API, and we were like, what will these guys do with this, right? And we realized that they were like,
Right.
we have. So they were large companies, but they wanted to sort of maybe figure out their fintech problems and actually commit resources to building something there, right? So we were like, एक बत्ती जली कि ये क्या चल रहा है. So what we did first was कि we wrote a white paper called The Future of Credit is Partnership Based Lending, and I'll put that out someday. But we just circulated it to some NBFCs, this, that, and actually थोड़ी partnerships were happening, but partnerships based lending was the key, is what we were saying. So it's like, अरे सही है. So we started
anchor-led model बोलते हैं.
Anchor-led, partnership based, हाँ जो भी. And I was like,
समझ
okay, then we were like, let's also write a blog. So we wrote a blog and we put it out, partnership based lending. Nobody's looking at it and all that, of course. Now we realized that A16Z started talking about every company is fintech company, and then they, we saw this term called embedded finance in that blog post. We're like, oh, what we are saying as a concept has like a cool ass name, and this is the name. It's called embedded finance.
True.
So we're like, array. So, but we had done all the work, and even if today you Google embedded finance, you first 3 hits में हम लोगों का blog आ ही जाता है, because we've done real work to put out what it means, etc. We've written a white paper, but we just repurposed partnership based lending हटा के embedded finance कर दिया हमने, and we're like, अच्छा, oh, this is something. And then we started to build an SDK and API solution. This is during COVID. And we like, it's been like, it's very we've done all sorts of crazy things to actually mature that thing, because if you imagine, right, building an origination piece needs real origination to happen through your pipes. How will you build it otherwise, we did like crazy stuff to actually get it going. We started off in personal loans, then we built all the BNPL stuff, B2B, B2C, BNPL, then business loans, and then it became a full-fledged SDK API, multi-lender stack with like all of the components that are required. Very complicated things to actually get it going. And it became that. But overall, coming to the definition of embedded finance as we see it, is essentially embedded finance is a monetization tool for B2C companies which have good engagement on their core platform.
True.
And they can drive cross-sell of financial services through embedding native experiences, which for originating these financial services on their core platform, right? So some of these things are native experiences are important, so that you can set up a good cross-sell, digital cross-sell funnel, right? And it is somewhat related to or adjacent to your core offering. So if you're a B2B marketplace, B2B BNPL is something that will work for you, but offering say insurance out of the blue when the retailer is about to check out will maybe not work, right? So it has to be adjacent to your core transaction use case. If it isn't, then
of course,
it just becomes a lead marketplace for loans, for example, which turns out to be fairly nobody values it that much in a way.
Exactly, makes sense. So in this in the universe of embedded finance, right, from your perspective, do you include other verticals apart from lending as well inside it? For example, insurance or investment products and all of that?
So we are like only doing lending. We do a little bit of insurance, but only loan attachment products. We are not like, so see, lending is a very deep use case anyway. We already do so many credit products. We do business loans, we do B2B BNPL, B2C BNPL, personal loans, and we do it for various kinds of ticket sizes. We do private limited partnerships, we do sole props on business loans, we do salaried, non-salaried. I think there's a lot, and the technology stack is very complex. I think it's a very large problem that we are solving already. So before we solve this really well, I wouldn't say we would want to venture into other areas. Another piece is that we feel you need true and deep expertise, because there are so many parties in the transaction. There is the platform, there is the infrastructure player, namely us, and then the lender. In any embedded finance piece, it is like B2B to B2C. Now, given there is an infrastructure component in the mix, so if you don't have true expertise in the product, and even if you have a great tech stack, it might not really work for you, right? And I wouldn't say the team really today has breathing space to build expertise in other areas immediately. To nahi hai.
Makes sense.
But there is embedded finance other areas.
Right. I mean, in the more broader sense, I think now people have started including all of that in the definition of embedded finance as well. Having said that, right, currently what exactly does Sorry, you were saying something, please.
So one piece is that in the US, embedded finance is mostly payments, by the way. It's not, other stuff is like really, now, because there is a lot of margin in the payments business, and it sort of rode the wave of vertical SaaS also. So, but India mein payments doesn't have so much margins that so many players will facilitate it. Also is a regulated industry now from a payment aggregator standpoint. So embedded finance in the US, if you sort of see blogs, etc., it actually means mostly payments. They say that all other things also exist, but they don't sort of really practically think that it is lending. I will say today embedded finance mostly in India means lending. Everything is just fledgling and coming up.
Yes. No, true. Makes sense. But Having said that, right, currently, what exactly does FinBox's solution encompass? Like, if you were to give me a two-sentence overview on what exactly does FinBox do in embedded finance or indenting?
So, yeah, there is a interesting piece. So, if you look at it from a digital platform or an anchor perspective, so say you are a
Mm-hmm.
food delivery company with like a very big restaurant, you know, base, and you want to give working capital loans, and you have like a dashboard and all digital properties to service your
Hmm.
restaurants. Then you want to add a
Right.
bunch of varied products. So one, you want to add a working capital loan, you want to add a business loan, which is a large term loan, and all of those things. You just have to integrate some
Right.
of our APIs, and we do everything that is required. So we will work with the
Makes sense.
platform to figure out what data is predictive of credit risk behavior, how do you size the loan, etc.
Mm-hmm.
To actually getting the
Right.
lenders on board, getting their policies set up, and creating the digital transaction piece. With you have the
Makes
ability
sense.
to build your own front end through our API stack, or you can use our SDK, which has a front end which is configurable in terms of your own themes to just get it going. So you can use something that is
Mm-hmm.
more out of the box to go live quickly, and or you can use our more deeply customizable API stack to build your own stuff. Right. So basically, if we are the infrastructure to facilitate all of this fairly seamlessly and manage the
Interesting.
life cycle
Interesting.
of the borrower.
So
Yeah.
this is got it. Got it. So this essentially enables any player with a good enough customer engagement and a digital platform to embed lending product into their ecosystem natively.
That is correct. Natively embedded, and through an SDK, if it's on mobile or web, you can use a bunch of these things to really build
Got
what you really
What's
want.
one
So
of the
it's
most
not.
unique use? Mm-hmm.
So
Please,
yeah,
please go on. That's
importantly,
okay.
as I said, it has to feel
Uh-huh.
seamlessly integrated into the system. You're not
Right, right.
throwing the
And
customer
that's
to some
essentially where the
other.
value add comes.
Yeah.
True, true.
Yeah.
So I have seen so many experiences where customers are essentially redirected to a different website, or it links up to a
Yeah.
microsite inside their own environment, which kind of breaks the experience and
Yeah.
throws off the customer कि क्या हो रहा है वहाँ पे उसका नाम लिखा था यहाँ पे कोई और है क्या है.
Uh,
But interesting, right? So what essentially is the most unique use case that you have built that you were not anticipating कि यार ये भी embedded lending का कुछ हो सकता है इसमें?
Unique use case. There is very interesting stuff that we are like super proud of, is to build a multi-lender marketplace with like real firm offers. This is a little technical, so see, getting like
No, no,
real
that's
offers for people, for loans in real time with from multiple lenders
fine.
has been like a dream of many people, but they build a lot of broken things
बिल्कुल
here and there, etc. We've been working very
बिल्कुल
hard to build this end to end, fairly. I would say, you could say, worked for more than 3 years now, 3 years in, to like really get this going well, right? And this is something that we are
right.
extremely proud of, and eventually some of our newer products will start talking about it, and we will open access to our API stack, which is a multi-lender API stack, and all of it, which will, I feel, change the game on how these partnerships are thought of and how fast they can scale later, right? So this is something that we are proud of, and
Interesting.
we will bring out in the ecosystem fairly soon.
Makes
But
sense. Makes sense. Let's take a step back and kind of deep dive a bit more into embedded finance. Um, from a point of view of let's say trying to simplify it, right? So there's this concept called as explain it to me like I'm a 5-year-old. So let's
yeah.
try to break it down the embedded finance the term, and you can try to explain it to me like I'm a 5-year-old kid.
Okay, cool. I'll try that. So if So for example, if you are trying to order food on like Swiggy or Zomato, and you you don't have the money now, but you will get money from your parents tomorrow, and if
Right.
there was a button which would let you take credit instantly now on Swiggy itself, and it would be easy and would look just like the Swiggy app looks or the Zomato app looks, then the entire experience of getting that credit is an embedded finance experience.
Understood. Makes sense. Now, I'm going to ask a question that a 5-year-old wouldn't ask. But how does the backend? I mean, I'm not talking about the tech backend. I'm talking about the financial services side of backend work for this, right? So when I'm on a food delivery app and when I click on pay now, essentially pay via whatever the pay later app or the pay later integration is there, what essentially happens there in terms of financial services? How does the money move, and how does that entire thing work?
Yeah, I think there are nuances to the model. I think there's a bunch of different things that happen, but very very simply, there are two things. One is, if I am already onboarded onto the pay later platform, then I'm just going to put an OTP and the transaction is going to go through. But then there is another piece, which is the more important piece in embedded finance, which is native onboarding. So you will have to do your KYC, everything on the embedded platform. But to be regulatorily compliant, a lot of this will need to come from the regulated entity or the lender. So the KYC will need to be hosted, but sort of in the regulated entity or their TSP, which tends to be us, or we've sort of maybe done some of this work with the regulated entity. We bring out all of those APIs, etc., for the platform to consume. And if you do onboard, then you become a customer. Now, how the transaction typically works is that you sort of verify, you get like a limit assigned to you, which is and then when you transact, you put in an OTP, and this transaction gets registered on both the app, which is Swiggy or Zomato in this case, and the technology service provider, which is us, and maybe it also hits some of the systems of the lender or the regulated entity. Now no money changes hands at this point, but you will get your order, and then there will be a reconciliation process that runs depending upon the financial arrangement between these folks, and the service fee, etc., gets deducted and sent to the app owner, right, at whatever frequency that is, maybe 3 days later, and then the borrower or the user has to pay back the regulated entity through either through a payment gateway or through a NASH mandate or UPI auto pay, depending upon how it is set up.
Got it. So in this scenario, when does the restaurant who's delivering the order get the payment?
So
in most cases, I think it could be varying, but
no. So see, in this entire transaction, the restaurant is not the stakeholder in this transaction directly. So Swiggy or Zomato is going to settle the payment, whether the borrower gets that payment, provides that payment or not. They have to settle the restaurant with whatever their contracts are, right? Which is maybe the next day or 7 days later, etc. But yeah, those are things. There's a lot of underlying activity to prevent frauds or misuse, or sort of there's a bunch there that I sort of glossed over, but there's a bunch of reconciliation work that also goes on behind the scenes.
Of course. Makes sense. Okay, and if I may ask, which all parties, how do they make money? Like all the parties involved, who makes money and how?
So see, we just talked about the B2C use case. In this case, two, three things happen for the platform. One is that customers typically become, if you get credit, etc., or it's easier to transact on the platform with just an OTP, you get like
The
more
platform being
retention,
the food delivery
the
app, right?
Swiggy, etc. So this is the B2C use case. You become
Got it.
more, sort of. Um, you get more engaged there, so you order more often, etc. Second is the average ticket size sort of
Right.
increases. If you are, maybe you start ordering, you were on an average ordering say $200, and then now you are ordering say 250 or 300, given you can afford it. So there's an affordability. So
Makes
there's
sense.
a convenience element for the customer. There's also an affordability element for the customer, depending upon the target segment. So
Right.
generally, that's how the platforms
Makes
benefit.
sense.
Then
Okay.
the sort of lenders benefit because they've sort of made a loan and it's a financial service, so they sort of earn a cut on top of the amount that is paid, just like payment gateways, but a little bit more because there's credit risk involved and all of the other stuff that goes on behind the scenes, right? So that is how they make
essentially
money.
earn a certain cut of the amount.
That is
okay.
Right. And the user of course benefits by they get their bills all bunched up and they have to pay like once a month, and they also get like a little bit of a bump in terms of affordability, etc. So that's the
Right.
B2C use case. In B2B, the dynamics are a little different. One piece is that businesses always want to use, so for example, now you are like a B2B marketplace, and you're selling stuff to a retailer. Now the retailer always wants to get the most inventory for the least investment, so they will tend to buy stuff on credit, sell it and repay, right? So it is far more value creative for in the B2B use case, and it drives a lot of repeat usage, and the transaction value definitely goes up, right? And then on the other side, there's also term loans, which is actually what most of our focus is, which are like larger loans for people to sort of maybe invest into their business, or sort of take personal loans, which is essentially where you are facilitating, the platform is facilitating discovery and educating the customer, and as the lender sort of does more business, they make money, and then the platform also gets a cut of the business for sourcing, right? So
there
are a bunch
Makes
of
sense,
complicated models, I will say, still in flux, but as they mature,
I think this is detailed enough, but yeah. But just wanted to understand, I think I had a misconception that in this case, in the B2C model previously that we discussed, essentially the current version of the pay later model, the companies or the lenders would only make money when there is a late fee involved. But I think, is that true, or are there other revenue lines for the lenders even when the late fee is not involved?
So see, when we say lenders, pay later companies, I think we're talking. So see, embedded finance or part based. So in B2C BNPL specifically, if you are doing this in what we call embedded finance, is essentially we're cutting out the middleman. So there is no pay later company. It is like a white labeled product typically, just like Swiggy Pay Later.
Right.
At backend has a bunch of lenders,
Native to
right?
the platform.
So there is no. Yeah, so there is no like in between. So you sort of, the lenders typically have a good cost of capital, and they can make a margin on these transactions. But you have like another layer in between, which is doing marketing and all of the other stuff, right? Then the model sort of becomes more, it becomes a more like
Makes
what
sense.
you are saying, and those players typically compete with payments companies typically, right? So their margins are more sort of very compressed, because payment margins again are compressed. But this is the monetization use case where everybody's gotten in, so that there is some charges that compensate for all of the trouble that we have that everybody's taking.
Right.
And there are less people involved overall in the system, and they're doing a lot less marketing outside the ecosystem of the anchor. The anchor takes care of the marketing and onboarding of this.
So in the native experience, so most of these lines are interest free for the customers if they are less than like a month or so. Correct me if I'm wrong here.
No, so see, these are things
is that the correct assumption?
I wouldn't say that. So see, it's all in the construct of where these are embedded, and I think these interest-free lines, etc., are business models for pay later companies, right? For us, when we get into one of these situations, typically we are talking about more bespoke credit products that suit the economic structure of the platform, right? So that's important, and that innovation definitely does happen, because one, as infrastructure players, we don't dictate what the product is going to be. It is for the anchor and the regulated entity to come together and decide to do, right? And our sense is, because we are infrastructure, etc., we see some of these things, we understand that unsustainable economic models can't fly for long. So there have to be risk adjusted returns for everybody involved, or else why will they do it for a sustained manner, right?
Makes sense. Perfect. I think having said that, let's move on to the next question that essentially revolves around future of this entire embedded finance ecosystem, right? Maybe let's say half a decade down the line, and that's I think a lot of time in the fintech industry. How do you see this evolving given the kind of influx of emerging technology-led models that we have heard today? Like every nook and corner of the recent GFF had an AI company doing something or the other in fintech. So how do you see these kind of interventions, if they become substantial at some point of time, kind of evolving or impacting the evolution of the embedded finance and impacting the evolution of what you do?
That's definitely an interesting question. One piece is that I was just telling some folks, just yesterday, that 5 years down the line, it will not be more of the same. It is going to be something different, like completely different.
True.
So I think, see, 2-3 things are happening which are interesting to understand. I think the embedded finance piece is having a profound impact on adoption of technology inside the regulated entities, because to service these relationships, the kind of tech stacks and the API stacks that you need to build and to sort of scale and monitor are very, very different from what they've done hitherto in the past, right? So basically, as the infrastructure really does develop and mature, a lot of and the knowledge of actually the conversion funnels, the economics, the the way to service customers ethically, properly, how the customer also understands who's giving the financial service, all of these things become standardized. Our sense is that overall this becomes a meaningful portion of the financial services industry, and standards will evolve, and everybody will be more clear about their role. So there's this brilliant book called Paying with Plastic, which sort of talks about in the early days of the credit card industry in the US. And in the early days there also people were running helter-skelter. Nobody was clear what their exact role was. Everybody was getting into each other's sort of domain also, but slowly people started deeply specializing, and the industry evolved and it became very large. So if you can imagine, from those days, merchant systems, payment systems, banks, all of these guys operated independently with no standards, etc. And suddenly emergence of standards happen, and everybody sort of rallies around it, and specialized players sort of start become people who onboard merchants, people who build infrastructure, people who do more settlement, who do reconciliation, some people do analytics, all of this. So I imagine the industry structure will mirror a little bit like that. Of course, developed markets don't come in and get replicated, but one piece is that there will be specialization, there will be multiple embedded finance players who will do some of these things really well, and we do stuff, sort of run the flavors of this stuff. Another, there will be more infrastructure companies which specialized in running and serving these needs. So analytics is a need, reconciliation is a need, settlements is a need. So all of these things will happen, is what I understand. And meaningful share, maybe
sense.
up to a 30% share of overall originations can be potentially sourced through embedded finance use cases. So that's like our most optimistic hyper bull case of what will be, what can happen in this sort of overall of that, and a lot of innovation also
Understood.
on type of
definitely. Makes sense. I think this has been a really insightful conversation, Rajat. Thank you so much for that.